We are going to be talking about GameStop today. So if you want to trade, get in on all the fun with the meme stocks on how to trade GameStop. Currently, we are looking at a daily chart. So each candle represents one day. But if you want to trade GameStop, I'm currently using thinkorswim platform. This is owned by Charles Schwab. So now when I opened up time and sales, if you look off to the side here, you can actually see this is the time. This is the current time that we are in. This is the current price. This is the order flow of the size of the orders that are coming through second by second. We're going to turn on the active trader tab. And this here shows us the order flow also. But now I've got this set up to buy market, sell market. So if you want to day trade this, that's how you would do it. We don't necessarily need this one on the side, but we're going to leave it open so you can actually see the order flow coming through. And this actually shows it as well. In thinkorswim, when you have this set up like this, you can go in here, and that's a whole different video as far as how to set up your perimeters. But you can set it up to where it's just a single order, or you can set it up to trigger with brackets. And what that means is that you can set up your buy and put your stop order in immediately afterwards. Now, typically, let's say I wanted to buy 100 shares. I could go to buy market, right? And it's not going to buy, it's a two-step process. I've currently got it set up as a two-step process. So it opens up this dialog box here. And if I wanted to buy 100 shares, you can see it says buy 100 shares of GameStop. And then it shows how much, right? So we are going to delete this. We don't want this. If you want to buy 2,000, you hit 2,000, you come up here, you buy the market, and it shows you like the resulting buying power of options 31,000, the buying power effect 41,300, the cost of trade including commissions is $41,320, and all I would need to do is come over to here and hit that green button, which I'm not going to do because I'm not actually going to trade this. I'm just showing you how to. If you want to play this dangerous volatile game, you would just hit the send button. If you have the funds in your account, you would own 2,000 shares of GameStop. So we're going to delete that. But now let's say you own the stock and you want to sell immediately because you're making a ton of money and you're in profit land. Then you come up here and then you just hit the sell and it gets a two-stop order. But you have to actually set this perimeter up in thinkorswim, and that's this auto send button. If you click that auto send button, that turns it into a one-step process, meaning if I hit that green button, if I hit this green button, I instantly buy 2,000 shares. And if I hit the sell button, I instantly sell 2,000 shares. Or whatever I set this up. I can buy 300, 500, 1,000, 2,000, whatever I want to do. So when you're day trading and you're scalping, you're in and out of the stock, that's the most effective way to do that. So we're going to back out of this now. We're going to turn off the auto send button so we don't make any mistakes. But what you want to do now is you want to change this parameter here. So we are going to turn this into a 1 day, 1 minute. So now what we are looking at is each candle represents 1 minute. So now we are into a deep dive. The black area represents when the market opened. As you can see, a lot of the short sellers and a lot of the money was made onto the downside pre-market. And then a little bit as the market opened, the stock tended to trend downwards, and then that's where we're at now. This is exactly where we're at now. But we want to add a study though. We want to load a study set. Now, Everything inside of thinkorswim is customizable. So you can go in here and set your parameters to your liking if you like to trade with, in scalping it's a different moving average. Some people use it's the 9. So if you're on the minute, it would be a 9-minute moving average. So for example, some people like to trade using VWAP. So that's the volatility weighted average price. This is the VWAP is what I currently have on there now. This white line here, so that is the 9 exponential moving average. That's a very popular moving average for scalping. See how it's trended, it's like it falls below it. Now it's holding the 9, so these would be your entry points. And then to set your bracket in, the thing flushes out like it did here, you have to get stopped out so you don't lose a ton of money. Now right now it's not too volatile. This thing's trading in the $20 range, give or take a few cents. But here's something else to take a look at. We have the exponential 9-minute moving average here. This is our VWAP. You can see this candle is fluctuating, and that's because we're inside of a minute. This is the buys and sells that are going on. If you come over here to this red area, as you can see, you can put your sell orders in, or if you come over to this, it's as easy as you clicking on here and you're buying your stock. If you hit the auto send button and you click on any of those areas, you're buying instantly, you're selling instantly. So if you're that type of trader and you love that anxiety and that thrill, that's how you do it. Or you have auto send on and then you buy market or sell market if you own the positions. Open up this box here. I've got this set up with brackets, so you can have it set up with 2 brackets, with 3 brackets. So like this bracket here, if you open that up, you can see I've got it set up to where you can customize your triggers as far as if it's going to stop you out or if you are placing a limit order. So for example, that's 1 bracket. You can set it up with 2 brackets. This platform is so incredibly elaborate and so amazing that it will blow your mind. So we're going to take the auto send off because we don't want to make any mistakes, because I'm not day trading this stock. I would not personally recommend to day trade, but I will say this, if this is your style of trading and you like this, these are the types of stocks that you want to do it with. This is not investing, this is gambling. 90% of day traders lose. That means there's a handful of traders out there that are successful at this type of trading. But it's not recommended and it's very dangerous, it's very volatile. The only time that you really want to get into this style of trading is if you already have a foundation. For example, you've got your 401k maxed out, you've got Roth IRA maxed out, your house is paid off, your cars are paid off, your children's college is all paid off, you have insurance policies for you and your wife, and you have a nice solid foundation, and you're sitting around and you got a boatload of money, and you're okay with throwing it into the furnace and burning it up, because 90%, that's what happens. They play this game. It's a losing proposition, but there are a handful that will be successful at this. But all the ones that I've ever studied that do this style of trading, they've blown their accounts up several times. They traded for years before they figured out how to be profitable in this type of trading. So if you're new to this industry and you're new to the game, build your foundation, you got money to throw in the furnace, now start diving in. If you want to learn how to do this without putting money up, then you open up an account with Schwab or another platform that has a simulator. So Schwab has a simulator. I'm active live right now, so I'm not on the simulated platform, but you can open up a simulator trade your style, trade your strategy, plan your trade your plan. You know, you've heard that a million times, right? So you do it in a simulator for several months, and if you can be profitable with your strategy in a simulator, then you can start putting real money to work. This is dashboard. Now what this is, this shows you the spread. So you can do the same here now. Let me make this just a little bit bigger. Okay. So you can do the same here. You can come up to here. We're going to do our active trader, and we can hit the auto send, and we can buy, sell as fast as we can click those buttons. So you want to make sure that you have good internet. For example, I'm not on auto send, so I wanted to buy, I would click that button, and now it's a two-step process. I'm deleting that. But if I was set on auto send, boom, I would have bought 100 shares right off the bat. I've done it. I admit it. I've done it. And it's too volatile for me on this. I have to manage my portfolio from here to the end of time. You know, for the younger traders out there that want to get involved in this scalping, it's very dangerous, and most people lose their money. Just be very careful when trading this style. So let's take a look at GameStop on a different level. This is a 1 day, 1 minute. So to give you an idea, if you're trading on this 9-minute moving average, you could have gotten in at any point. You're at 2059. It's currently trading at 2071. So 20 cents. 20 cents doesn't sound like a lot of money, but if you have 10,000 shares or 5,000 shares, well, then it can start adding up, and you can jump in and out of this thing. I personally don't like this style because I don't like sitting at the computer all day long. When you're making money, you're a superstar. And when you're losing money, you're depressed. Let's just put it this way. I've blown up my account. I've been trading since the late 1990s. Yeah, I did the dot-com bubble, the real estate debacle in 2008. I've been through a lot of crashes. And here's something that you want to consider. In a bull market, everyone's a genius because the market is chugging along. All the indices, the Dow Jones, the Russell, the S&P 500, the Qs, the NASDAQ, the whole market is just pushing in a positive direction. And there's some variables involved in there. But primarily in a bull market, you can pick any stock, any ETF, and most of them, and you can make money. In a consolidation period or a bear market, that's where the weakness shows up, and that's where you lose your money. So if you're trading in and out, if you're doing high volume trading in a consolidation period or a bear market, a lot of technical analysis doesn't work in a bear market. I've blown up my account several times. Now I've built it back up. You know, I know how to build it up. So I don't play these games and put it at risk anymore, because the key to success in this industry is to manage your risk. So if you are going to play this game, you need to set those brackets up. So when you're buying the stock, you've got your trigger set in for your stop immediately. So you buy it, the stop shows up, and then you can trigger your way out of it too with selling the same exact way, except for you buy it, you're anticipating it going up to the next resistance area. So to give you an idea, we are going to, let's do a price level. We're looking at the top of this range right here. We're going to go right here. So right here is a level of resistance. As you can see, it came up here, it hit it, it pulls back, hits it again. Now it's pulling back, and now it's trading below the 9-period moving exponential moving average. If you're shorting or if you're buying long, you use the support and resistance, and that's where you need to understand the basics of candlestick charting. You also need to understand support and resistance areas. So for example, we have a high volume bar here. This is going to be a level of support. It was an ascending triangle, but it's broken it to the downside. This can be very positive if it breaks to the upside, but in this case it broke to the downside. So now your resistance is the 9-period moving average. As you can see right here, these last 3 bars, this is the last 3 minutes. We are currently on a 1-day, 1-minute chart. So this is live trading right now. Now I'm not trading this live because I don't trade like this. I'm more into investing, and I've got more videos on my channel that basically will show you a lot of different ways to invest and to trade in the stock market. Investing, that's the way to go, is invest for the long term. I recently did a video. We have an election coming up this year in November, so there's a video on how does the stock market react during that month. Is there an advantage or a disadvantage? So I have a video on there to show you. It's not a political video at all. It's just facts of how the market's reacted since 1980. So it's a very interesting video, so check that out. But anyway, back to this. As you can see, it's holding. So if you're shorting here, you're making money. And as you can see, it came down to the support area and it's pushing back up to there. So right now it's kind of in la-la land. It's trading a little bit below the 9 exponential moving average, and it just recently came down to this support area. Now these are very weak support areas. The longer time frame that you have with support and resistance areas will give the gravity of how important and how much weight it will hold. That's scalping. So now let's look at this company. Do we want to own GameStop? So let's take a look at it. In April of 2020, the stock opened at $1.19, closed at $1.18. This is what was going on in 2020. Let's look into this area when this thing broke out. So there was a lot of stories going on with Reddit. There's a lot of short interest on this stock, meaning that a lot of institutions, hedge fund managers, they had big short positions on this stock, and also AMC. That's going to be a different video. But they had big short positions. The short position percentage ratio was through the roof. And so a group of guys got on Reddit and started talking about it. And I don't know the intricacies of exactly what happened, but they started pushing the stock. People went in there buying the stock. So when they have the short position in, and if the stock moves up in price, then these guys that have stops in, they get stopped out, and it causes the price of the stock to go up and go up. And then before you know it, you have this parabolic move that happens. Now, when this happens, there's a handful of people that made a lot of money because you're trading at $1 here all the way up to $120. If you had 100,000 shares and you were able to sell and get out of your positions as this thing was in its parabolic move, became rich doing that. And there's probably maybe a handful of people that did, but the greed sets in. And once the greed sets in, then you're in trouble. You see this money and you think it's just going to keep going up and up and up and up and up. And then it comes down and a lot of people get wiped out. By the time you hear about it, by the time your friend tells you about it, it's too late. You've got to be watching these charts, watching in the news. Even if you watch the news, it's a little bit too late, but you have to be watching these charts. 25 million shares, 25 million, there's 59 million. And then here, 578 million shares, this thing started pushing up, and then it consolidated for a few days, and then 788 million shares, and this thing just parabolic move. This is so unhealthy for any company, any stock. This is now the gamblers that are just throwing money at it, and there's a lot of people that lost their tail on this. Here's another danger factor that happens when there's parabolic moves like this. There is a thing that's called limit up and limit down. What is limit up, limit down? The NASDAQ trader.com. There's a lot of intricacies to the limit up or the limit down. We're not going to go into the details of it, but I'm just going to point out a few things here. Google this, look this up, go on to NASDAQtrader.com, pull this up, get your head wrapped around limit up, limit down. This is to protect the market. So what that means is, for example, the premise of what a limit up, limit down is. So for example, this stock opened at 1065. The high of the day was 1919. Oh, that's only 100% move in one day. In this case, it looks like primarily mostly limit up. So as the stock price gaps up and starts moving through these areas, they will halt trading. You cannot execute your order. You can't buy it, you can't sell it, you can't get out of your position, you can't get into a position, you cannot do anything. Closed on this day at $16.25. The next day, this opened up at $24 and probably was halted immediately. Some people made a boatload of money. You can get caught in a trade. Now, let's say you're shorting the position, and this stock is, let's say it's trading your, say $25, right? You're like, okay, this thing's gone up too much, I'm gonna short it. And you short this position and they halt it. And then the next day, this opens up at $88 and you were at $25 and you have a short position. That's why shorting stocks is so dangerous, because now you are obligated. You've got a short in at, let's just say your short is at $25 and it opens up at 88. You have to pay that differential. So 25 to 88, and then so you panic, you get out, and then the stock comes back down. This is so dangerous because you could have shorted it here at $10 without a stop, and it goes all the way to 120. A lot of people get wrecked and they blow their accounts up and they go bankrupt. There's a lot of people that bought up here at 120, 110, 100. There's hundreds of millions of shares were bought and sold through this area. And a lot of people get trapped in these areas. In between each dotted line here, you can see, let me draw an arrow just so you can know what I'm talking about. So between this dotted line and this dotted line, this is a year. We're on a daily chart, we're on a 5-year chart, but in between these areas is to show you basically what's happened, what's transpired within this stock within a year. Let's take a quick look at some of the earnings of this company. The consensus was for them to make $1.45. They made $1.34, and that was March 23rd. So from that point, the next one, losing 63 cents a share. The actual was they lost 45 cents a share, and that was June. So as you can see, with each quarter they're losing money. Their estimate was to lose 41 cents. They lost 76 cents, and that was in September of 21. So this company is just quarter after quarter, they're just losing. Here the earnings estimate was to make 76 cents, and the actual was they lost $1.86, and this is March of 2022. This company is just losing a ton of money. How long can you lose all this money before you just go bankrupt or before you get bought out by somebody? As far as investing, this is not what you want to invest in. Absolutely not. This is what you want to invest in. This is Vertiv Holdings. Check into this company. This company is a superstar. This is what you want to invest in. Companies with good fundamentals that are earning money. They're making money every quarter. They have good fundamentals. Look at the charts. The charts will tell you the truth of what's going on within the corporation. Here we are, we're back into GameStop. So here is our most recent gap up. September 6th of 2023, the estimate was the actual was losing 15 cents and they actually lost 3 cents per share. This is the estimate is 25 cents. They made 22 cents and that was March of 2024. Will this continue to do this? Who knows? Nobody knows. It's just when this happens, look at the volume. The average volume is 3 million shares, 7 million, 4 million, 4 million, 3 million, 2 million. All right, 8 million. Oh, something's going on. 36 million. Back here is 3 million, and then now 36 million. That's pretty substantial. And then it just consolidates, and then we have some more volume coming in. This volume is letting you know that something spectacular is happening inside of this stock, and you have to really dig deep into technical analysis, but no one can anticipate these moves. Let's look at a 5-day, 15-minute chart. So the black area is regular hours trading. The big move happened after hours, 5:15. And then here's pre-market here coming into the wee hours and traded all the way up to 80. If you were in this, you could have got smoked pre-market if you trade during those times. But this is where the big moves were happening. And then to the downside is when the market opens. This is going to be resistance. And this is something to think about, that there's a lot of traders and a lot of people that invested in this company way back here, and the stock is trading at $20, that are upside down or waiting. They've been waiting for a long time to get out of this stock. This is going to be headwind. This is going to be resistance going all the way to the top again if it ever gets there. These are going to be key areas of resistance going all the way up, meaning it'll hit these areas, it'll back off. These are areas that are going to be resistance. We're going to come over and zoom in. What did it do? It went exactly to that resistance area and sold off. This is a resistance area. As you can see, that's where it closed. And then the next day, this is a resistance area. It busted through it. This is a resistance area. And it should have held level of support. But with this type of broken structure with parabolic moves, stay away from it. It's a losing proposition. If you got money that you can burn, have fun. And if you made money doing this, congratulations. Can't say it enough times. Don't do it.